Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about USDCHF. Now, why do I want to speak about USDCHF? Because at the moment, we have very interesting price action and structure on it. In fact, starting here from the monthly, what we can see is that the market just shifted from creating lower lows and lower highs to now creating higher lows and higher highs. In fact, the market has just printed this very strong impulse to the upside after this horizontal situation that we had here, and in area of price where you have horizontal price action and then a massive move to the upside usually indicates that we actually had an accumulation going on inside of here, and now we're actually getting the impulse to the upside fueled by this previous accumulation. Now, in a situation like this where we have such strong bullish momentum, we could expect more potential bullish continuation, at least according to what we have just seen here on the monthly time frame. Dropping down on the weekly, what do we see? Now, here on the weekly, there is no doubt that we had a very strong impulse. Now, after an impulse, you usually expect a correction. And in fact, we can see how the correction has already just started. Now, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And if we do that, what we can see is that we have a 0.32 Fibonacci retracement, which is currently lining up exactly at this area that we could expect the market to test and then to reject to the upside for the next leg. To the upside, obviously, for the next bullish leg. Going down on the daily time frame, what do we see? Now, from a daily perspective, this is where things start getting very interesting. In fact, we can see how in creating the move to the downside, which is the correction, which we have already identified on the weekly time frame, the market here on the daily is also creating an additional pattern, which is an M pattern. In fact, we have this move to the upside, correction, move back up, and continuation lower. Now, generally speaking, after the creation of an M pattern, what we want to see is the market create a move to the upside to go and complete the pattern at the previous support turned resistance. So here on the daily, what we could expect is potentially a little bit more continuation to the downside, but then we would like to see the market create a nice move to the upside for the completion of the pattern at this previous support turn resistance, which is also the neckline of the pattern itself. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CHF, we can see how lately net positions have been decreased. We went from having an already negative net positioning of minus 5.2k net positions all the way down to having minus 15.7k net positions with an additional 2.2k shorts added with the last report, reaching 20.4k shorts compared to only 4.7k longs from an institutional perspective, which obviously makes the CHF quite weak. And a weak CHF is exactly what we need if USDCHF is to make this rejection to the upside to complete this M pattern. So how we could be approaching this potential pattern completion. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So 4 hour, and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries at that point, we could be looking for this potential move to the upside and completion of the pattern at the neckline. Now, if you don't know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description, and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.